Why are municipal bonds unique within the fixed income markets? Hi, I'm Rebecca Quan, and I'm here today with Paul Malloy. He's head of the Vanguard Municipal Bond Group, and we're going to unpack some of the factors that make munis different from other fixed income products, and importantly, where we see opportunities for advisors and their clients. Paul, thanks for being here.
My pleasure.
We've seen a rally in the muni market since munis were labeled as cheap earlier this year, but you wrote a piece in Fortune magazine and you suggested that there are still opportunities out there. Can you tell us more?
Yeah, absolutely. So we are no longer in the cheap phase of the market, but it's still actually very attractive. And a lot of that has to do with the shape of the yield curve. The municipal yield curve is still pretty historically cheap, particularly in the 10 to 20 year spot of the curve. And that's offering a very attractive carry and roll down point. Mm-hmm. So if you're willing to move further out the curve, you can pick up some really good income. Especially viewing munis as a income asset class where you're trying to generate tax exempt income. It's a really great spot to be, putting money to work for the long term and picking up that carry and that roll down in the portfolio.
Okay, but how do you balance that duration risk while you're looking for this higher yield?
Yeah, I think that's a really great question. So as we're thinking about taking that extra duration risk to pick up that extra yield, I start off with one simple idea is that duration risk is not default risk. That ultimately, you're not in any sort of scenario to lose money. If rates go up, it's just going to take you a little bit longer time to recover the money. So, it's really a question of what is your time horizon and what is your ability to stomach a little bit of volatility. If your answer to those two questions are, I can stomach some volatility and I'm in this for the long run, it is really a great opportunity and would recommend, moving out the yield curve to pick up the extra yield.
That's great. Well, where else are you seeing value in the market?
Yeah, so in the long end, as we've talked about, the curve is a great way to make money with high grades. In the front end, actually, the story is really credit. That traditionally and over the last year, despite a little bit of cheapness right now, high grade municipal bonds in the front end have really been overbid by SMA accounts. They've been very rich and unattractive. So we think a better longer run play is actually buying credit in the front ends and picking up some pretty substantial yield versus high grades.
So Paul, there's been a lot of discussion about things going on at the federal level, but municipals tend to be offered by state and local government. So how do we think about the detachment from the federal and state and local municipalities?
Yeah, I think it's a really great observation about the municipal market is that states are their own constitutional entities with taxing authority, as are local governments. You're looking at things like sales taxes, property taxes, the ability to raise revenue on their own. So while there is a linkage between state governments and federal governments, they're not nearly as tied together as one might think. And if you're looking at the broader picture and saying, how do I get some additional diversification across government sectors, municipals are a great way to add that to your portfolio because you're getting these separate constitutional entities in your portfolio mix of broader fixed income. The only place that they're really still attached is to the treasury market, that you always have this tax rate difference between taxable and tax exempt markets. So there will be much greater correlation to the treasury market than there will be to the actual fiscal status of the United States.
We're going to talk about a very popular topic, AI, but I don't think most people think about AI and the municipal bond market. Can you tell us a little bit more about how it's restructuring the market and how Vanguard's taking advantage of AI tools?
Yeah, absolutely. So when I think about AI, I first like to start off by defining it. There's two different parts of AI. There's generative AI, which are the large language models we've been hearing so much about. But then there's machine learning. And that's been around for some time. So when we're thinking of how we use it and how it's playing in the markets, generative AI is great from a research standpoint, especially as you're trying to find information about thousands of different issuers across the municipal market, from school districts to hospitals, and then trying to make connections between all of these different issuing entities. And then you've got the machine learning side of things, where we're putting together quantitative models, things that can pick up, things that traditional models cannot pick up, particularly as it pertains to municipal bond pricing. So we're incorporating those into our process, and things like machine learning can be quite complex and isn't something I would suggest most people go after on their own. So even if AI stayed where it is today and didn't have any additional advancements, it would still be having short and medium run impacts on the municipal market.
That's fantastic. Well, Paul, thanks so much for spending time with us today.
My pleasure.
And be sure to like and subscribe to this channel for more insights from Vanguard's thought leaders.